Hello and welcome. My name is Andrew Thake and I'd like to welcome you to our Minds and Money 5 at 5 show that this week is sponsored by Dundee Goodman and is also brought to you in association with Resource Global Network. For those of you attending 5 at 5 for the first time, the aim of 5 at 5, 5 guests, is to go and maintain engagement between investors and miners through a lively interactive format during the current situation. A few admin announcements before we start. To make it as interactive as possible, please have your video switched on. To ask a question, you've got a couple of options. You can either submit them via the chat function, which is at the bottom of the screen, or even better, you can go and wave your hands via the invite participants function. I will then unmute you and you can ask your question live. We've got an absolutely packed show this week, which is hosted by Jonathan Goodman. Jonathan has over 30 years mining investment and operating experience. Over a distinguished career, he's gained extensive knowledge and relationships in the global mining and resource finance sectors. A warm welcome to Jonathan Goodman.
Thanks, Andrew. Well, I got to admit, I'm very excited about today's session. It's the one thing that I'm most excited about is all of the companies that are here presenting with us are companies which Dundee is a large shareholder, and so and going to remain a large shareholder for quite some time. So we have Ian Bamborough, the CEO of Saturn Metals, Mike Hudson, President and CEO of Mawson, Matthew Greentree, the Managing Director of Ausgold, and Darren Gordon, the CEO of Centaurus Metals.
Hello, everyone. Thanks for attending.
These are all great companies. I think we're going to have a lot of fun. I want to talk a little bit about Dundee Goodman Merchant Partners. I mean, we're relatively new but old at the same time. As Andrew mentioned, I've been doing this for a long time. I've been managing money and managing mining companies since 1987. And Dundee Goodman Merchant Partners is the merchant banking and investing arm for Dundee Corporation. And it was set up by myself as kind of what I would call the dream team and the dream way of investing. Each of the partners in the team has been handpicked by me, of people that I've known and worked with for many years. We have 9 investment professionals. I think on average, we have over 200 years of investing and mining experience. And the team has visited over 750 properties in over 50 countries, and a broad range of different skills, technical skills are covered by the team members. And our belief is that to get mining right and to do it properly, it's all about managing risk and de-risking a project. And to do that, you need to have a lot of different skills. Mining is truly a team sport, as many people who've been investing for many years have really learned. And so we do have people who are experts on environmental management. We have people who are experts on resource calculation, geologists, mining engineers, people with a metallurgical background, and then people like me who's just a geological engineer. And that means that the geologists think I'm an engineer and that the engineers think I'm a geologist, and when they get together, they think I'm a financial person. So let me start by talking about what our investment themes are. We're operating under 2 very strong investment themes that were developed when we put the team together about 2.5 years ago. The first one is that central banks and the countries of the world are using debt, are overusing debt as a means of financing their governments. And we've seen this happen, and it was working very well. As countries build up their debt levels, I mean, you wake up one day and you're Greece. And we all saw what happened to Greece, but now the countries that are looking like Greece are much larger ones, like Italy and the United States for that matter. And that trend was working well until COVID hit, and then it started working really well. So COVID has accelerated the rate at which debt has been used, and that's why we see gold and silver trading at the levels they're trading at. And we don't see a quick fix to this. We see that this is going to be around for a long time. So I think we should feel comfortable that we're going to be in a good gold environment for the foreseeable future. The second theme that we're working off of, which we believe very strongly in, is climate change. Climate change is real. I think it'd be very hard to argue that it's not real. But we're optimists. We believe that there's a lot of solutions to climate change. I was just telling Darren before everyone got on the call that I finally started to drink the Kool-Aid and have bought a Tesla. And I've been driving one, and it's an incredible experience when you just plug your car in at the end of the day. But when you actually look at what it is when you actually, whether it's battery technology or solar energy or nuclear energy or all of the low carbon ways of doing it, they all involve mining. And with particularly to battery, I think you're going to hear a story on nickel today. And I hope Darren mentions the forecast for nickel demand, because it's actually quite exciting. In Canada, over 50% of the people were asked about their next car they're going to purchase. 50% of the people asked about the next car they're going to purchase said they're going to purchase an electric car. And when you think about it, I'm not sure the electric car industry can produce electric cars fast enough for them to all purchase it. But you can bet that as fast as they can build cars, they're going to get sold. And so we do have a very strong outlook for metals like nickel, copper, obviously lithium, cobalt, zinc, and we think that the battery metals are going to propel the future. So within that, as you know, we have a very strong technical team. We do a lot of due diligence on every company we invest in, and that gives us the ability to invest for a long period of time and really work with the managements of all these companies to help out wherever we can help out and be not just a financial shareholder, but a shareholder that helps wherever we can. So on that, I'd like to hand it over to Ian Bamborough, the CEO of Saturn Metals, to acquaint everyone with the Saturn story. Wait, before I put it over, Ian, there's one thing I did want to say that I have notes on. All of these other than the fact that Dundee is a shareholder of all these companies, I think you're going to hear they all have very strong and committed management teams. They all have very large land positions in great geological areas. They're all very well funded. They all have the potential to significantly expand from the resources that they have here. So you're going to see their resources. We've done a lot of work. We think that they're all very conservatively done, very well done, and we think there's a lot of potential for them all being significantly higher. And they are all in commodities that we see a lot of upside from here. Now on that, I'm going to hand it over to Ian Bamborough. Ian?
Thank you for the introduction, Jonathan, and thank you to Dundee Goodman and to Mines and Money for the opportunity to speak today. Pleasure to meet everyone. Before we look at this slide on the screen, I'll give you a bit of a preamble and introduction to the company. So Saturn Metals was listed on the Australian Stock Exchange just over 2 years ago, about 2.25 years ago, in March 2018. And it was spun out of a company called Peel Mining, who'd held the Apollo Hill asset, which is our main gold resource, and a very large land package in the heart of Western Australian goldfields for quite a long time. And that particular land package hadn't had perhaps the love or focus that it required or needed. And there was a couple of reasons for that. One, I think Apollo Hill itself was originally found in 1986 by a company called Fimiston Mining. And there's been some great explorers and gold companies that have been in this particular region over the time. One was Barrick and Homestake that actually held this asset and part of the land package back in sort of 80s, 90s, but when the gold price was about $256 an ounce, and it was very hard to make this sort of terrain work. There was in the past, there's a big lake, and the physicality of that lake over the land package had kept people away. I think there was lower hanging fruit on hills, and also there were in the past issues, or not issues, but land access matters with the traditional owners, which my predecessors who had this package did an excellent job of working with the TOs to overcome, and we've embraced that work and really opened up an excellent opportunity. I think when we listed, we were about, the company's valuation was $11 million, and we listed about 20 cents. We're currently worth about 82 the last time I looked, and it's been a nice steady growth trajectory. We currently only have just over 100 million shares on issue, so we have a very strongly held and supportive register with major shareholders such as Dundee Corporation, with a very long, technically supported vision for the company. And I think our institutional support on the register at this point, I've just recalculated, we're currently sat at Diggers and Dealers is 44%, and we also have a couple of very supportive long-term individuals with a great kind of history and track record in the West Australian goldfields in developing projects, building projects, finding projects on our register. So that's a sort of preamble on the company. I guess location-wise, we're on a greenstone belt, a prolific greenstone belt in the heart of that West Australia. About 2 hours drive north of Kalgoorlie, which is where I'm sat at the moment, which is, for those of you internationally and don't know it, is a big mining centre and hub. And we've just had the big Diggers and Dealers conference here, which was heavily gold focused. So I'll talk about the asset now. Apollo Hill is a big tonnage, low grade asset. There's no getting away from it. But it works. So there's 781,000 ounces at the moment, and heading towards 1 million ounces. In fact, our next resource target, which we're hoping to publish or planning to publish in December this year, is 1 million ounces. And at the moment, it's about 24 million tons at just 1 gram a ton. The deposit works economically, in my mind, for a number of reasons. And the first is its geometry. It's about 600 meters wide, only about 1.4 kilometers long. And the current resource is quoted down to only 180 meters depth. So shallow, open pittable dirt. You can see on that cross section a bit of a look at the ore body. Importantly, I think the key point on that cross section is the blue outline, which is where the last resource upgrade was done in October 2019, so just about a year ago. Is that blue outline, and I suppose what you're seeing on that is all the drill holes, all the intersections. And what's really nice is that since that point we've done about 40,000 meters of drilling, and you can see the little inset diagram down there at the bottom. But this is a slice through that ore body, and the beautiful picture that's emerging is a much bigger system than when we last quoted that resource within that blue outline. And some of the intersections that are listed both on that diagram in this new hanging wall position are pretty decent. Now, the ore body has historically been 1 gram a ton, and I just want to sort of point to the tenure of those intersections. There's been a shift, or a couple of shifts this year, as we've stepped east on that cross section, where we've entered some different stratigraphy and rocks. Those rocks have a better chemistry, and we've started to see much better grades come out. Now, as well as that, within any given open pit optimizations, I guess material in that hanging wall that was previously waste material is now mineralized. And what that's doing is giving us the opportunity to push the strip ratio down. So I think the first sort of advantage for this thing is its geometry. but particularly the size of this thing now. And we'll have a look at a picture at the sort of back end of this presentation, which gives you some perspective on the scale of it. And again, a sort of shift in the grade and a shift in the stripping ratio. And we're looking forward to sort of putting that next resource upgrade out. There's some high grade intersections there, but still within, you know, big, thick. I think there's a 36 at 1.32 on that slide. And what that gives us the opportunity to do is look at big selective mining units and try and go for economies of scale and push our unit cost down. This one, what you're looking at, the other big lever within any big tonnage, low grade deposit, I suppose, is you need strong metallurgy. And we're blessed at Apollo Hill. I think blessed is probably the right word, in that we have a very simple processing route with cheap physical processing options. This work was done on 2 big 100-meter composites, which at 0.8 grams, so we're not gilding the lily in terms of our you know, trying to make things look good, and very representative of the deposit. And I think 60% gravity recovery, which means cheap physical processing, is upper quartile in the globe, and arguably I'd say upper 10th percentile. And importantly, that was achieved at the coarsest commercial grind size of 300 microns, and that really translates to a much lower energy use, lower grind, lower power consumption. There's nothing particularly complicated about it. There's no preg-robbing materials, no copper, no arsenic, no carbon, and all the gold's held in these very coarse grains. You could see in that little video spinning around, and an excellent grade recovery curve, which means when we move dirt from any given pit scenario, we can use even the lowest grade dirt can be put through a processing plant or processing options. You see some of the options there in terms of heat leach kinetics, which have been absolutely fantastic in COM at very coarse crush sizes, so easily amenable. I think we'll move on to the next slide. So we usually finish on this on any presentation for people, and I think it speaks for a thing. I think you're looking at the number of drill pads we've put in the last year. So there's a tremendous effort. The 3 little circles are the rigs turning away at the moment. This picture was taken about 6 weeks ago, and since that point, there's a whole lot more pads on that page. But then, you know, if you can imagine yourself down on one of those drill pads, you can see the scale of this thing. And I think we've got quite a rare opportunity, and perhaps one of our biggest competitive advantages compared to some of our other gold peers in Australia is that all these ounces are developing in one big, single, simple opportunity. And you know, I guess that's probably us. That's it from me in terms of a brief introduction to the company. So thank you, and any questions, welcome.
Okay, should we do the question, Andrew? Should we do the questions now or later?
Yeah, we can probably kind of add in like maybe like 1 or 2 questions now. So what are your plans for 2021, Ian?
Yep, 2021 we'll see a lot of drilling. We'll keep that pressure on. We've just raised, I think, sort of around $16 million and really put the company in a position with a very strong balance sheet. That will really translate to that sort of 50,000-60,000 meter program that's underway. Beyond that, we'll see, I think, like I say, there's a resource upgrade coming. We'll push for another one in May next year, and we'll keep sort of delivering that position or snapshot to the company. Next year, there'll be a bigger push on metallurgical testing, perhaps through the different rock types and different zones of that ore body to ensure that we've, you know, at the moment, we're kind of sort of working on the 10 to 30 met tests as we're working, but we'll push that up to the hundreds. Really tick those boxes and make sure we understand this ore body from a processing perspective. I think later in the year, you'll probably see us push on with geotechnical drilling, and we're really trying to, I suppose, look at keep the pressure on the drilling for right sizing this deposit, because as we keep pushing the boundaries, we don't want to kind of go to any scoping studies too soon, but at the same time we're bringing our mining thinking along with us. Recently we've just pegged about 600 square kilometres of water exploration licenses. We should see a water exploration program starting with EM drilling. And really, as Jonathan mentioned, bring that expertise in to de-risk the project along the journey of it.
Okay, thank you very much for that. I think we can go back to yourself, Jonathan, and then if we have any more questions, we can perhaps come back to them at the end.
Okay, well, why don't we do that? So our next speaker will be Matthew Greentree from Ausgold. Matthew.
Thank you. My name's Matthew Greentree. I'm Managing Director of Ausgold, and I've been with the company for since 2017. And why I came to Ausgold with their large land package in the southwest was the opportunity that I saw within the Katanning Gold asset. Could we just go to the next slide, please? And I think with recent discoveries, and Julimar is one of the, I guess, talk of the town in Western Australia at the moment. But those years ago, when I looked at Katanning for the first time, I could see a large portion of Western Australia that had really not received much attention in terms of modern exploration. Our current resource projects centered around a historic or a mine site. There has been mining in the late 90s, if you want to call that historic. But we've actually got a very large land package of over 4,000 square kilometres around that as well. And what we've been able to do is piece together areas of high prospectivity, and we've put that together along a 130 kilometre strike length. So we've got a line share of what we think is the best parts of this southwest Yilgarn. We've got some pretty good neighbours. Boddington's 130 kilometres away, and that's Australia's largest gold mine. About equal distant to the west there's also Greenbushes, which is the world's largest lithium mine. So it's a bit of a strange discussion we've got here, because for all the time, until fairly recently, I think there's been a negative view on the southwest corner of the Yilgarn Craton. But it also hosts some very, very large deposits. And I think with the discovery of Julimar, it's really refocused. And what we've seen very recently is that large pegging by Anglo-American to our north. And they've really just stopped on our northern boundary there. And I presume they're looking more for base metals. So within our land package, we're focused largely on gold, but I think there's also a large potential for PGEs and nickel as well. And we're having a look at those opportunities, particularly just on that western block there, which is the Red Hill project, which is a laid mafic intrusive. So we've got a lot going on, but what I'd like to take you through is what we're doing at the moment, and we're really focused on some recent drilling in what we call the Jinkers area. Now, could I just get you to flip to the next slide so we can have a look at that in a plan view? Yeah, thank you. So this is almost half the resources that we're looking at the moment at Katanning. It's a 1.2 million ounce ore body. That's at 1.1 grams per tonne. Now, a little bit like Ian, there's a bit of a mismatch to the overall grade and what we're drilling at the moment. And these results you can see on the left-hand side are recent results within the last few weeks, and some earlier results on what we call Jinkers South. What we're seeing is a parallel lode to the main Jinkers lode. Jinkers lode accounts for about 450,000 of that 1.2 million ounces. And what we're doing at the moment is extending along strike. We've been very fortunate with this ore body because it responds very well to downhole EM. And you can see those blue rectangles there that represent EM plates. So like nickel explorers, we're able to target our drilling very selectively. But what we've found is that these are lining up along strike. Alongside our drilling campaign, so we're committed to do a 25,000 metre drill campaign over the next few months in this area and a few other prospects around this site, is target these high-grade zones that sit within the Jinkas ore body. We think there's multiple repetitions of these ore shoots. They're fairly discrete, but what we're finding as we move further northward in our Jinkas South prospect, the widths are actually increasing. And in our last announcement we put out on Friday last week, we had some very wide intercepts up to 38 metres at 1.1 grams. But when we take it at a lower cutoff grade at 0.1 grams, the mineralised zone's actually up to 89 metres. So these are very, very broad mineralised zones with a core of higher grade. And you can see there's some fairly exceptional grades there as well. They're very linear, and what we've been using with our downhole EM, very detailed gravity to map the geology here. They've got very specific structural and geological host rocks. So we've been much more predictive with our exploration. I think past explorers have come unstuck on this deposit by using brute force and trying to pattern drill something that was a number of very high grade shoots that doesn't respond well to that sort of approach. If I get you to take me back one slide there, thanks. This is a long section of that same view. And what we can see here on the right-hand side is that Jinkas ore body. But very quickly, Jinkas South is becoming a very significant part of our current ore body. It's not included in the resource. And we're extending it northward. It's got an approximate strike length of about 700 metres, but from what we've seen, we've got some diamond drilling on the northern end, which is intersected, I don't think the lode properly, but very close to. It's over 1 kilometre long already. I think as we fill in along strike, we'll I think be rewarded with some of these more high-grade zones. So I think this story is really building and really showing that this has a potential to not just be a much larger ore body. We've got a view that this has significant potential, but also that there's much higher grades within this than you'd see if you just looked at the overall 1.1 gram per tonne head grade. So I think it's worth keeping an eye on us and just seeing what we're doing. Beyond our current program at Jinkas South, we're also looking at some large areas to the north, which have been previously undrilled. And you can see the northern part of that, or on the right-hand side there, that the lode starts to plunge off. So there's some structural controls there. We've got a much better understanding following our very detailed gravity survey of where that's gone. So we're chasing that lode northward. It's open for about 850 metres. So when you start looking at that, that's a big portion of ground that hasn't received a drill hole directly along strike from this mineralisation. I think there's real potential for further extensions there. And following that, we're working on wheat and sheep country. We've been heavily focused on this resource area during the cropping season because we've had access. As the crops come off, which they do during the summer, we'll start stepping out. We've got programs planned on our Red Hill prospect, which is a lode mafic intrusive. We're doing a lot of work on understanding that zone, trying to identify ultramafic bodies within that lode mafic intrusive, obviously for nickel and PG targets. We've also got 47 identified gold targets within our 4,000 square kilometres. So we've got a lot of work ahead of us, but what we've got in the core of this is, I think, a very real resource project, which we'd like to see and take that through to mining. So I think that's a really good snapshot of where we're at, and I'm really happy to answer any questions.
Okay, we just got a quick question that's been sent in by the audience. Can you just tell us a little bit about the geological setting for Jinkas?
Yeah, so what we're sitting in, it's high-grade metamorphic rocks. most of the mineralisation sits in mafic granulites, so they're probably volcanic rocks, very similar to what you would have seen in the Eastern Goldfields, just a metamorphosed equivalent of that. There's, as I mentioned, there's a strong pyrrhotite association, and that's leading us in with our EM, and that's, I guess, to the sulfidic zones are related to that gold mineralisation.
Okay. Jonathan, do you want to take any more questions, or do you want to move on to the next presentation?
Why don't we move on to the next, and when we can finish with more questions later on.
Okay, sure.
Next speaker will be Michael Hudson from Mawson.
Thanks, Jonathan. Hello, everyone from Melbourne, the lockdown capital. Despite this Aussie accent of mine, Mawson, who I'll present on today, is a Canadian listed, Toronto Stock Exchange listed company. I've spent the last 20 years in the Canadian markets, and as you'll see, just starting to turn my hand back to Australia after many years away. Thanks to Jonathan and Dundee Corporation for the invite to present here, and for Minds and Money and for putting this on. So in simple form, we're a gold exploration company. We've made discoveries in lots of parts of the world. The team is run by myself, a geologist. We've got a very solid team of explorers. That's what turns our crank. We want to find these projects, and ultimately somebody else will be mining them. But we've got experience to take these through into early to mid stage economic studies, in which you can see at least one of our projects heading towards that we made a grassroots discovery a couple of years ago, and that's turning into a significant project. So 9 rigs turning on 4 different projects this year. So the true and only way to make discoveries is to drill. Geologists, we're getting perhaps better at what we do, but the odds are perhaps lessening, and they can be only increased by drilling a lot with smart geology. So I take Matt's point there of using smart geology to crack the code to unravel these deposits, which is an approach we're taking also. So a quick snapshot here of the company, about 120 odd million market cap, 16 odd million Canadian in the bank. So we're fully permitted and fully cashed up to execute over the next 18 months. I mean, this is the time in the market where opportunity is being rewarded ahead of the absolute results. So we're creating lots of opportunities essentially for our shareholders. The 4 projects that I'll talk about are on this slide. Thanks, Elaine, for swapping that over there. We have traditionally been in the Nordics for a long time. I've had personally 20 years up in that part of the world, and our flagship project, the one that we've put the hard yards in, about 60 kilometres of drilling over the last 3 years, is in Finland. It's a gold cobalt project. We just doubled the resource there in the last month, so we've got something like 700,000 ounces at just over 2 grams gold, and it's also got the cobalt kick that really plays a very important role in the EU. We are not just a simple gold exploration company looking to develop a gold project, but we're one of the few 43-101 compliant cobalt resources in the EU and in Finland, and providing a sustainable and ethical supply chain in country is extremely important, and that's a key part. Even though it's a byproduct, it's a gold project, but the cobalt very much is what I call the government rock. This is a project that is growing, and our job is to make it grow a lot bigger. We basically got 10 by 10 square kilometres of gold, a lot of gold that we've found where there's 99% cover, glacial till up in that part of the world. So it's a drill exercise. We put most of the drill meters into this project over the last 3 years. We've got some good controls. So like I said before, we've cracked the code, and we can by structural geology and electromagnetics, there's pyrrhotite associated with this mineralization that's conductive, and it lights up the mineralized zone like a Christmas tree, which we're very fortunate. So we use this to explore at surface and to depth. So a project that's in my mind, I should have put a disclaimer up there because it's a very forward-looking statement, but this will become a multi-million ounce district, and really it's just the start. We've got I think 65 kilometres of host rock. It's a strata-bound host, but structurally controlled. So not every part of that strata-bound host will be mineralised, of course. But I think we've tested 5% of that host position so far. So it's a project in the making. We've got one rig turning there now in summer permitted areas, but our main drill season is winter from December to April, and we've got 5 drill rigs there to continue to expand. And very much like Ian's ambition of going to that magic million, that's our ambition also on this project in this next round. We added about 350,000 ounces of gold equivalent in the last drill campaign at about $10 US per ounce discovery cost. So Finland is our base. It's our solid base and what has been driving the company for a long time. But the sparkle is very much the Victorian assets, and with some other Australians here on the line, and we all know that the Victorian goldfields, for many reasons, have basically been forgotten for a number of good reasons, probably since pre-World War One. Nuggety gold, hard to pull together in a modern sense. Victoria got more difficult more quickly than most places to explore. My position would be that it's very explorable now because the mining industry is better at exploring and bringing communities along from the very early starts of exploration. The key point around Victoria is that nobody cared too, because until Fosterville made their Swan Zone discovery, it really wasn't such an appealing target. But now we know what we call these epizonal deposits. 2 very different orogenic events have formed the 2 different styles, the Ballarat Bendigos, and 60 million years later we've got these epizonal deposits, of which Fosterville's one, and it's been one of the better discoveries on Earth. And ironically, it's been the Canadians who've really driven that and recapitalised that mine and that company, and then a lot of the exploration dollars have come from Canada also. So sort of overlooked by perhaps the Australian market for 120 years, but we're catching up on this side of the pond now, and we've got 2 rigs turning here now. We've got 3 of the 8 historic epizonal fields. We're looking under old mines. We're applying geophysics and big broad surveys. We've got 3 geophysical teams working IP, gravity and mag to really understand the structural framework and controls on these deposits. Ironically, not a drill hole literally under some of these old fields that can extend, combine, for tens of kilometres, and nobody's looked for the high grade search space. So a real opportunity. We put our first drill hole out only in the last few days from one of the projects, 15 metres at nearly 4 grams gold from surface. That was just overlooked by the old timers. They really needed ounce type dirt back in the 1800s. So that was mullock in the day, and now it's not mullock, and you can walk across these things in Victoria still. So lots of drilling and results to come. The last 2 projects I won't focus on too much. We're just about to start drilling in Mount Isa. We've got a very big land package there. I should say we've got over 400 square kilometres, nearly 500 square kilometres in Victoria, and then the right of first refusal on the biggest contiguous land package there of 3,600 square kilometres. So a big part of Victoria is we've got under control there, or at least the right to control that larger package and a big land package in our own right. Likewise, a very good land position in Mount Isa. Cannington was the largest silver producer on Earth for many years, and still is one of the top 10 producers. We've got ground all the way along strike for something like 60 kilometres. The Queensland government have been very proactive in funding exploration, and we've got a 100% program for a program to drill a combined nearly 2 milligal anomaly at depth. That's a gravity anomaly with combined mag. Big roll of the dice, but when you can do it with, thankfully, Queensland taxpayer money, it makes it an easy exercise. And then in Western US, in Oregon, we've got a deal with the largest landholder in the US, where we've got another party earning in. So we're not spending a dollar on the last two projects. Shareholders get a free ride, but our partner will be drilling there. They'll be earning an interest, and we'll be 20% carried to production if they find anything. There's 150,000 hectares that we've got under tenure there in agreement with the holder. Not my dog.
Yeah, that's my dog calling our broker.
Hopefully to buy. So that's really it. There's a few other slides there, but I suspect I've gone more than enough time. I mean, I'll just really repeat what I'm saying there with the last two slides. So in summary, lots of drilling, resources that are growing. We're starting to pivot those resources in country into mining projects, but in the public domain, they still will become a lot bigger. A large part of Victoria with the right orogenic style and a crack team that we put together in a pandemic in lockdown, which has been quite an interesting exercise, and drilling lots and doing the first principle exploration really for the first time ever, I think you can say, on these projects. So thanks Andrew and Jonathan.
Okay. There's a question I'd just like to ask that's been sent in by Tom Barrow, which is, when is the finished project spinning out, and what retention interest is Mawson likely to retain?
That's a fairly direct question. I mean, I've talked about it before, that at some point the two assets obviously don't make sense together. At the moment, in our mind, they do make sense. Finland, I think, needs to get a little bigger. Australia, probably hands down, is a standalone company there. I mean, we added something like 65% to our land position and another historic field yesterday. So we're drilling and adding assets to Australia, whereas Finland really needs another drill program, advance down the early economic studies, and I don't think it is the right time right now, but come the new year and into the new year, we'll see where drill results take us and where the market is.
Okay. Thank you very much for that. I think, in the interest of time, Jonathan, do you want to move on to the final presentation?
Let's move on to the final presentation. We're going to move out of gold now and into nickel. So Darren Gordon of Centaurus Metals.
Thanks, Jonathan. Thanks for everyone to take the time to have a listen. I guess for us, the Jaguar Nickel project, located in the northern part of Brazil, has been our sole focus over the last 12 months. It's a project that we picked up from Vale about August last year, something that was quite advanced, but just something that didn't meet the scale criteria that they needed. What we saw was a lot of high-grade mineralisation that we could follow up. It already had 55,000 metres of drilling, diamond drilling into the project. And with that, we saw an immense amount of opportunity. And I guess over the course of the last 12 months, we've been very successful at showing that opportunity. So June this year, we announced the JORC resource with over 500,000 tonnes of contained nickel metal, being 48 million tonnes, a bit over 1.1%. I think importantly for a nickel sulfide project, it's one that actually has a lot of the mineralisation close to surface. We really haven't yet targeted the deeper extent. So we see, as I say, a large portion of this mineralisation coming close to surface, which we think will be highly amenable to open pit mining methods, which, as I say, is a bit unique in the nickel sulfide space, particularly at the grades that we're talking about. So with that, we also have a high-grade component, over 20 million tonnes at 1.5% nickel, a bit over 300,000 tonnes of metal, which we think will help very nicely when we come to mining and give us early payback on the project. There's a number of deposit areas. We're doing a lot of drilling over the next 12 to 15 months. We've got a 75-kilometre drill program planned. We've got 5 rigs on site at the present point in time. 3 of those at present are focused on infill work to lift a portion of the resource from inferred to indicated, which will allow us to get our scoping study results out into the market. We have a rig working on sort of extensional and step out drilling, and we've got an RC rig there doing some work on some new greenfields targets, which look quite exciting to us. So there's a combination of things going on with that, and with this very significant resource that we've already got. We're in the middle of completing scoping study work, and we're targeting delivery of that in February next year. A lot of that timing is just due to getting the infill work completed. But as Jonathan sort of alluded to at the start of the call, I guess we see the nickel space as a pretty interesting one at the moment. The demand for electric vehicles is going to grow. I don't think that anyone is going to question that. I guess the level of that demand is unknown, but at any level of demand, we feel like there's still a large place for nickel sulfide projects. If you're looking for class 1 nickel to feed into that electric vehicle space, it's got to come from either sulfide projects or from HPAL by processing laterites, and we know that that's a pretty capital intensive way of extracting nickel. So for us to have a resource of this scale with this grade close to surface being open pittable puts us in a really nice position to feed into what we believe is the ever-growing market. Now, Tesla's obviously leading the charge in that, and Jonathan's a great example of people making that move into the nice EV cars. But I think it's more global than that. I think we do see a big portion of the European market transitioning. There's a lot of comments coming out of Daimler and Volkswagen about, removing manufacturing of internal combustion engines and transitioning those manufacturing facilities into electric vehicle cars. So our resource is large enough to allow us to be a key player, I think, coming into it. And I guess we've got a broad aspiration to be a 20,000 plus per annum nickel producer. We're targeting by the end of 2024 to have our project up and running. So a few things to be successful in Brazil. You need to have the right people, which we do. We're a team that's been together for some time in Brazil with a deep knowledge of Brazil. We have people in country there at the moment. We've been able to continue through the whole COVID phase, be able to do all the work that we needed to do. I think the other important aspect is that we are located in the Carajás mineral province, and that is a world-class belt. There's probably 10 IOCG deposits there that are over 100 million tonnes of resource, predominantly owned by Vale. It's got the highest grade iron ore, highest grade deposit in the world at S11D. There's a number of nickel deposits there, and now we think we've been able to define a pretty significant nickel sulfide resource. So with that location in the Carajás, you do get the benefit of infrastructure. Vale have spent billions of dollars in this region over 30 or 40 years. There's power, there's water, there's roads, there's rail. So there's no impediments to us really being able to get this project up and running. I guess today what I wanted to do is sort of spend a little bit of time just talking about the exploration. As I said, we are doing scoping study work that will evolve, that will come out in September, base case being a concentrate project. We are looking at pressure oxidation as a value add opportunity that will be assessed during the course of the scoping study. There's some really strong benefits in Brazil for why that can work, predominantly associated with low power costs. You're probably talking under 10 cents a kilowatt hour for power in Brazil, which makes for low operating cost environment. And we think that that's going to help us quite a lot as we look at our project. If you can just skip back again, Elaine, just for a sec. Sorry. So if you look at that slide, you can sort of see the gold outline is the known deposit areas, what we call the Jaguar deposits, and in the northern limits of the tenement, we have the Onsa deposits. Those areas are, as I say, contained in the 500,000 tonne metal resource. We are doing work there to infill, so that's going to be part of the drill program. We've obviously got to do some geotech and some other work just to be able to get the project through, but we are also looking at the western portion of the tenement here. And we've identified a number of new opportunities that weren't historically looked at by Barley. So we've closed in the mag, we've closed in the soils, we've been able to do fixed loop EM work over there, and we've generated some really nice targets. And that, as I said, will be where our RC rig is going to focus its initial attention. You can go to the next one now, Elaine. But around the known deposits, I think what we can safely say is that we haven't really been able to fully explore the opportunity as yet. We've drilled down 200 to 300 metres depth. You can see high-grade mineralisation at surface in a number of these areas. So these sections are from 3 different deposit areas. On the left there, you've got Jaguar Centaurus. You've got some recent drilling, a step-out hole that sort of intersected 45 metres at 1.4% nickel. In the Jaguar South in the middle, you can sort of see very close to surface, 20 metres from surface. You've got 22 metres at 2.65% nickel. And then the Onsa Rosa on the right there, you've recent intersection chasing some higher grade zones, 6 metres at over 3% nickel. So lots of opportunity. The light blue lines on those sections are the EM conductor plates. EM is a very powerful tool for us, and certainly in the Carajás. We believe that with those EM conductor plates, if we extend our drilling at depth, we will continue to find more mineralisation. So we've got a fantastic resource already. It's large, it's globally significant, but we really have only just scratched the surface from an exploration point of view. So as we do more work and we drill these holes around the known deposits, we think that will extend the resource quite significantly. So I'll leave it there at the moment. I think Centaurus holistically has a strong project. It's got plenty of upside to it. We think that we're in the right commodity at the right time, and that bringing this project on stream in the middle of the decade is going to put us in a nice position of where nickel is likely to be headed. So thanks for your time.
Okay, thank you very much for that. Can you give us a quick comment on how COVID-19 in Brazil has impacted the project?
Yeah, really not much at all, to be quite honest. We were drilling quite extensively up until about April. We slowed down our drilling to a couple of rigs at that point in time, just to make sure we had all of our protocols and controls in place. We've done that. We're testing our people every month. We have all the PPE. We've got systems in place about how we keep our team distant and socially and self-isolating from one another. So I think whilst Brazil has made world headlines, obviously for the wrong reasons, I think when you look at it at a quite local level, there's a lot of people doing a lot of good work to try to minimise the impact of COVID on their own operations. I think we've done a really good job of that, and that's what's allowed us to be able to increase the drill rigs back up to 5 operating on double shift, and feel very comfortable in being able to do that. So I think there's been a lot of good headway being made. And I think as much as anything, it's important for the local communities to be able to continue to work, but do it in an environment where they feel safe and protected.
Okay. Thank you very much for that. We've got about 5 minutes to go, Jonathan, so I'm not sure if you've got some questions that you would like to ask at your end, or whether you'd like to take a few more questions from the audience.
I'm happy for the audience to write a few more questions. I've got a couple that I want to comment about. The first one is to Ian. Can you talk a little bit about the potential of the rest of your project, your property, and the potential for repeats?
Yes, absolutely, Jonathan. There's 1,600 square kilometres of ground around Apollo Hill, and that's very greenfields land package. I think just when we listed, we had about 1,000 square kilometres. And just to put it in context to the goldfields, you know, the first thing we had to do was fly 750 square K of it with first pass high resolution magnetic. So there's literally no drilling. That's the first tool you use when you go into a new region. And that was quite a rare opportunity particularly in this part of the Eastern Goldfields. I think the really nice thing at the moment is, we've been sort of incrementally chipping away at that big land package and looking for opportunities. We've been able to get on with that sort of early stage geophysics. With a recent capital raising, for the first time, we have a proper budget, and you'll see, a concerted effort to drill across that land package, looking for some big new gold systems in I think, in my mind, one of the most prolific greenstone belts in Australia. Beyond that, we have a property or a joint venture opportunity in New South Wales at a place called West Wyalong, which we enacted in April this year. West Wyalong produced in the late 1800s, early 1900s. It did just under 500,000 ounces at 1 ounce per tonne. Best year of production was 1911, where it produced at 3 ounces per tonne. So very high grade orogenic gold system. It's about 40 kilometres from Cowell, which is Evolution's big, sort of 6.5 million ounce deposit. And there's also some fantastic geological settings on that greater tenement as well. We're delighted. We did the first proper community consultation meeting last Thursday. That went really well in terms of the stakeholders in that community, and I'm hopeful we'll be drilling on that early in 2021 as well. And again, well funded to press on with it. So I hope that gives a bit of a decent summary there, Jonathan.
Thank you.
Thank you.
The question for Darren is, are you at all worried, because you've got obviously so much exploration potential, that you're going to size your project too soon and then find out that your resource is so much more that you could actually mine it more aggressively?
Yeah, no, I mean, it's obviously something you're always cognizant of, but I think we've got a pretty good handle of what it might look like from an open pit point of view, which in part is obviously going to drive the sizing of your operation.
Right.
I think the benefit that you can get if you get it right at the start, size it the right way at the start. I think no matter what happens, we've already got a very significant deposit, and I don't think by continuing to expand that you're necessarily going to want to make your project too much bigger. So, from a company point of view, you're always trying to trade off the capital and the what your production is going to be relative to the rest of the market. But I guess that's the work that we do during the course of this scoping study now, is get to a point where we think we've got a sustainable throughput rate that we can manage no matter what the project looks like.
I know one of the things that I've gone through in previous projects, which is when you have something like a 2 million ton a year operation and you're operating at something like 6,000 tons a day, and then you find an underground zone that grades something like, I'll use 3% nickel, which would be obviously so much, that even if you could take 500 tons a day from that underground zone, it'll dramatically boost your economics. Yeah,
no, I tend to agree. And I think that's one of the real nice things with the Jaguar project, is we do have a lot of optionality around how we develop the asset. Because there's so much mineralization relatively close to surface, I actually think we'll have a reasonably long mine life on open pittable material before you actually transition into the underground. Now, you can see from deposits like Onça Rosa that there's some nice grades there, but that will take a little bit more time to get into. So, we completely agree that, if you find a nice little sweetener from an underground, you're going to want to try to target and get into that. And that's part of how we're thinking about the mine plan, is that there's going to be deposits that we get into early, and we want to be able to aggressively get into those early so that we can access the underground. But there'll be other areas of the project which might just be open pittable.
And I got one question for Matt Greentree, which is not really a question. Can you just repeat the number you said of how many targets you have for gold on your property?
Yeah, we've got 47. So we've got 5 favourites we're working on immediately, but we've got a massive ground holding. And I guess one of the things that impresses me, because there's been a lot of surface work, but no follow-up across this package. So what we've learned at Jinkers and that Katanning Gold project, now we're applying to other areas. We've got that first mover advantage. We've got to pick up these projects. For instance, me and Muggan, we've got 27 gram rock chips, and we're looking at that to follow up and design a drill program around it. Things like that, observations, and really just a very consistent database, and that knowledge from what we've discovered drilling and looking at the open cuts and mapping throughout that belt. It's really given us an advantage that I think other explorers haven't had.
Okay, well, I think now I'm out of time, aren't I, Andrew?
Yeah, I think we're just about running out of time. So I don't know if you've got any closing comments or closing thoughts, Jonathan?
Yeah, I want to thank all the companies for participating here, and a special thank you to Mines and Money for throwing this event, and as well to all the people that came in and listened, and thank you very much, and look forward to doing this again.
And many thanks to you, many thanks to our speakers for this week, and many thanks to you, the audience. We'll see you at 5 p.m. London time next week. Thank you very much. Bye-bye.
Thank you, everyone.
Thanks.